we'll be going over IRS Form 1045. This is an application for a tentative tax refund that individuals, estates, or trusts might file, generally if they've already filed their tax return, and then there's a carryback tax credit that they can retroactively apply to that previous year tax return. So this is a two-page form. We'll walk through that in a little bit. We'll kind of go step by step in this, but let's talk a little bit about who might be looking to get a quick refund for this form. So first of all, there have been a couple of changes to this form since the last time we recorded it. I believe that was in 2023. So one of the changes is that net operating losses for individual taxpayers are now calculated on IRS Form 172. So we'll put a link to that, resources we've created on that in the show notes. But basically, you can still use this form to report the refund, but the calculation of the net operating loss itself used to be on Schedules A and B of Form 1045. That's no longer the case. That's what IRS Form 172 is for. So, and you can also file this electronically. You used to not be able to do that. So, net operating losses, generally speaking, you can carry. A net operating loss can be carried back for 2 years only by certain farmers and some insurance companies, and more details on who's allowed to take those net operating losses as a carryback for 2 years in the 172 instructions. There's also a NOL deduction limitation. So basically, we're going to focus on completing this form instead of all the limitations. But let's go over a couple of other general concepts. So the general business credit, that's usually that could be any number of business related credits. They're usually consolidated on IRS Form 3800. The net Section 1256 losses, this is for different types of contract, like futures or basically certain types of commodity contracts that like options of futures and stuff like that that are regulated by Internal Revenue Code 1256. So there's a tax form that you would use to calculate those losses, and then if applicable, you can carry them back as well. So let's see. You're supposed to file IRS Form 1045 within 1 year after the end of the year in which you had the NOL, the credit, or the Section 1256 contracts loss. So, and then you would attach your tax return, any calculations. So IRS Form 4952, if you did an investment interest expense deduction, this would be for the year of the loss or the credit. So your Form 461, which calculates the limitation on business losses, any of the Schedule K1s that you received that contributed to any carrybacks. So basically any of the forms that you would have completed that calculated that were involved in calculating the carryback. So IRS Form 8886 if you had reportable transactions, IRS Form 6251 if you had AMT adjustments, obviously IRS Form 172, not only the Form 3800, but any supporting documents that would have gone into that calculation. IRS Form 6781 is the one that calculates the gains and losses from Section 1256 contracts. So anything that's applicable, and we'll put as many links in the show notes to resources we've created about the pertinent tax forms. So, IRS Form 8995 if you had to go back and recalculate qualified business income deduction. And then for estates and trusts, they would attach copies of their Form 1041 with any accompanying schedules. So you can also claim a refund simply by filing an amended tax return. So the difference between filing Form 1040X and filing Form 1045 is that the IRS is supposed to process your Form 1045 a little bit more quickly. According to the form instructions, it says that the IRS will process your application within 90 days of the later of one of these dates, either the date that you filed a complete application or the last day of the month that includes the due date for filing your tax return. So that's if you submit this after filing your tax return, then you should expect this refund within 90 days. I will say that 2025 has been a challenging year for the IRS. Lots of regularly filed tax returns have gone 6 months or more without the refunds that are generally expected within 21 days. So this might not be a completely realistic scenario given the resource constraints that the IRS has experienced recently. So let's go through the form itself. So starting at the top, we've got the taxpayer information. We've got some information about the years, blah, blah, blah. The actual computation of the decrease in your tax. And that is pretty much the vast majority of this form. So, and then signature, tax preparer signature, so on and so forth. So I will say we're walking through the mechanics of this. I am going to put in numbers that are not rooted in reality, but we will talk about where those numbers come from. Again, when you go through this, you're going to have to complete your separate calculations. If you're using tax software, because this is now filed electronically, this should be a lot more straightforward for you, but let's go ahead and begin. We're going to go ahead and just assume that we have $1,000 loss from each of these three sources. So that's not going to be the case in everyone's situation. You could totally have a net operating loss, but not an unused business credit or a Section 1256 loss. But for the purpose of this demonstration, we're going to walk through all three of these. And then we're going to say that this was for the 2024 tax year beginning, if it was a fiscal year, then you would have to put the beginning and end dates. So, for example, the federal government's fiscal year starts on October 1st, runs through September 30th of the following year. And then let's just say that this tax return was filed on 4/14/2025. So if this is an application for an unused credit created by another carryback, enter the year of the first carryback, we're going to say that didn't happen. If you filed a joint return for some of the tax years, but not all of them, then you would have to break out, the respective tax returns, which ones were filed jointly, which ones were filed separately. So there's additional notes in the instructions. I'm just pulling them up real quick so we can go over them. So you would also have to attach detailed allocation schedules for a filing change or for different spouses. So if you filed a joint return with a different spouse from year to year, you would have to provide an explanation on that as well. I'm going to circle back real quick to the unused general business credit and the Section 1256 loss. So if you claimed a tentative credit based on the carryback of an unused credit, a business credit, you would also have to attach a computation that shows how you calculated the credit after applying the carryback. And generally, an unused general business credit must be carried back 1 year, and then you can carry forward as many years as you want. Again, special rules apply if you filed a joint return for some but not all of the years involved. For Section 1256 contracts, you can elect to go back up to 3 years. Now, an estate or a trust is not able to, but if you want to make that election, then you would check box D at the top of your form 6781, and then the amount that can be used in any prior tax year cannot exceed the net 1256 contract for that year, and it can't increase or result in an NOL. So what I take that to mean is, let's just say that you had $10,000 worth of a 1256 contract loss, and you're carrying that back as far as you can. For the 2024 tax year, you would only be able to claim that loss up to the amount of Section 1256 gains for that tax return. So let's imagine that your 2024 tax return, your Form 6781, shows that you had $5,000 worth of gains. That means the ceiling on your 1256 contracts loss would be $5,000. Then you would have to go back and see if you can claim it in other years. And again, you can go back multiple years because, if you're claiming the loss, from 2000, if you're claiming the loss in one tax year, you can go back up to 3 years, even if you're more than 1 year away. So let me just make sure that I clarify this point. So I mentioned that you have up to 1 year. That's 1 year after the end of the year in which you had the contracts loss. So if you had the contracts loss in, say, 2025, you have all the way through the 2025 tax filing season to go back to 2024, 23, so on. So now we're in line 5 right here. If there is a Social Security number that's different from what's up here, then you would enter that, and you would enter the years for that carryback year. If you changed your accounting method on IRS Form 3115, you would enter the date that the IRS gave you permission to change that. Lines 7, 8, and 9, these are yes/no questions. Have you filed a petition in tax court to which the carryback is applied? In line 8, is there any part of the tax that's resulted, or the credit or the loss, is any part of that from a reportable transaction that's required to be disclosed on IRS Form 8886? And finally, if you're carrying back an NOL or a Section 1256 loss, did this cause the release of foreign tax credits? So you may need to recalculate foreign tax credits if they're eliminated or reduced by a carryback. So you can't, if that's the case, then you can't use IRS Form 1045 to carry those released tax credits to earlier years. So you would need to file a Form 1040X amended tax return to do that. So also, if the released tax credits result in the release of general business credits, you wouldn't be able to use Form 1045. So we're going to carry back 1 year. Again, you can carry an NOL back 2 years if you're a farmer, but let's just say that we're doing this for this is the first prior tax year. So from the form examples, let's say that our tax year is the 2024 calendar year, and there's a farming NOL carryback for 2 years. You would enter second and that's the tax year ending 12/31/2022. This one would be first, and this would be so again, if you were trying to go back 3 years for a Section 1256 loss, then you would be using all 3 of these columns. So again, generally the NOL deduction after the carryback, you can only go back 2 years if you're if it's a farming loss. So, and let's just, so in the instructions, it gives us an example of $35,000 for a farming loss. Just let's just say that that's our $1,000. We would put that in there. The adjusted gross income before the carryback, let's just say that that would be $50,000. After the carryback, it's now $49,000. Deductions, you would include in the before column any deductions from AGI as shown on your tax return, or as previously amended. So basically, if you're taking the standard deduction, it's going to be the same. And let's see, for this 2022 standard deduction, for married couples filing jointly, that was $25,900. That's going to be $25,900. So we would subtract these numbers from each other, and the before column, that's going to be 24,1. This one is going to be 23,100. Exemptions, in the form instructions, basically it says that exemptions are 0 for 2018 through 2025. I do believe that the new tax law change made that a permanent. So I expect in future iterations of this form, the exemptions line will come out. Taxable income, you would normally get this from your tax computation worksheet. Or the tax tables, taxable income is whatever the line 13 minus line 14 is. So since we don't have any exemptions, the income tax comes from the tax computation. So you don't necessarily have to use the tax computation worksheet. That usually goes up to $100,000. You can use the tax tables, but whatever that figure is, you do need to attach an explanation. So you would also include any taxes, from one-offs like IRS Form 4970, which is the tax on accumulated distribution of trusts, or 4972, which is the tax on lump sum distributions. Those two would be added in here, although those really aren't used that often. So let's just say, and I'm not looking at the tax computation tables, but let's just say that the tax bill here was originally $2,500, but because of this $1,000 reduction, it's now $2,400. You may need to recalculate any excess advance payments based on your premium tax credit. Let's just say that doesn't apply here. We're going to keep things simple. You may also need to recalculate alternative minimum tax. So you would need to go back to IRS Form 6251 and refigure the tax. So let's just say that there was no alternative minimum tax because this is pretty low threshold. So we're going to add all of these amounts up. 2,500 in this column, 2,400 here. The general business credit, again, we're not going to do any of that in this column. We'll do it in the second column. So we'll go back to that. So we're going to put no general business credit. If you had a net premium tax credit, again, this would be the new PTC for anyone that's on Obamacare. You would use IRS Form 8962 to calculate your premium tax credit. If you had any changes in other tax credits, you would, make those changes here. So we're just going to say that none of those are applicable. And then we're still going to have the 2,500 and 2,400. All right, so in lines 25, if you had self-employment tax, in this case, John Doe does not. He's an employee, so he does not have self-employment tax. Based on his income, he also doesn't have additional Medicare tax, but there's a situation in which you could possibly be required to recalculate your additional Medicare tax. So in a real life situation, because John is carrying back as a farmer, he probably would have self-employment tax. I'm just skipping over that for the purpose of this. All the calculations are calculate this amount before, calculate it with the new income. So the rest of these I'm going to put in zeros for most of them unless they warrant an actual calculation. So John Doe would probably have some sort of self-employment tax here. Based on his income, he probably would not be subject to the additional Medicare tax or the net investment income tax. Those I will put links to resources we've created about all of those forms as much as I can in the show notes, but based on this particular situation, those wouldn't be applicable. Let's see, the other taxes. We'll just say that he wasn't subject to other taxes. So now we're going to add all of these lines up. So 2,500, 2,400. And then the amount from the carryback item from line 30. So that's here. We're going to put that there was a decrease in tax right here. And then in line 33, basically that is the overpayment of a tax. So if you apply for a tentative refund, that's what you're going to put here. And you would need to attach your computation. So across all these columns, you would say, hey, I have a claim of right adjustment for, let's say, $100 plus whatever we come up here with. So let's say that there was no NOL deduction here. He still made $50,000 in 2023. So all of these figures are basically going to be the same as the before. So we're just going to kind of go through this. And we'll just say, I realize the fact that things change year over year. For example, the standard deduction would be different, but for the sake of brevity, or as in the interest of keeping this video as relevant and short as possible, I am not drawing out all the details. And if you're doing if you're using tax software, this is all automatically done for you. So the only reason I'm going through the second column is so that we can attack the general business credit. So we'll just say that all of these are 0. And since this was not a net operating loss that subtracted from income, it's going to be an actual credit that reduces your tax bill dollar for dollar. So that business credit of $1,000 reduces the tax by $1,000. And we're just going to say all of this is still zeroed out. And we're going to get down to 2,500, 1,500. We also put that here. And so now you could attach your computation that says you're requesting a refund of $1,100. You would sign this if you're using your paid tax preparer, like an accountant or CPA or an EA. They would complete this field down here. If you're married filing a joint return, both spouses have to sign this document. So let's see. So if lines 1A and 1C are blank, you can skip all of this because these are adjustments to income. So the NOL deduction, your deduction in line 12, I believe, would also include, looking that up. So the adjusted gross income actually is where you would enter any AGI that you refigured after the carryback. So the NOL deduction, you would enter the NOL deduction as an adjustment to the AGI. You would actually have also included the Section 1256 loss here. Since this was going back 2 years, you can't apply it here. We could have done that here. I just kind of kept it the same to demonstrate really the business credit and the impact that that had, because that credit reduced the tax by $1,000, whereas the AGI or the NOL deduction or the contracts loss reduce your AGI by $1,000. And then the tax bill, while this isn't exact, it's roughly in the same neighborhood, probably $100, $120 maybe of a reduced tax versus the $1,000 dollar for dollar tax reduction based on the carryback of a credit. So I think that's going to wrap it up for this video. I know it was a little exhaustive. I've been refreshing these videos after reviewing the first versions to try and make sure that they contain as much comprehensive detail as possible. Make sure we kind of cover as much as we can that's relevant to the situation. So as I mentioned, we'll put links in the show notes to not just the article that accompanies this, but also the articles and videos that we've created about so many of the forms that we mentioned here. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.